Hi guys, welcome to the sharpening session today. So for those that don't know, just to explain very quickly what a sharpening session is. Now we're running these live on Saturdays, and we're also doing actually some sessions on Sundays at the moment about Top, our platform. But normally sharpening sessions run on Saturdays, sort of every other Saturday. Now we do them on a Saturday because that's when most markets are closed. So it means that we have more time to expand on theories, answer questions, without needing to be placing trades, without you guys obviously wanting to take the sessions that we do during the week to help you with your trading or to guide you in your trading sort of live. This is more of a Q&A, more of a theory-based session. That's why we do it over the weekends. Now, if you're watching recorded, hopefully at least this theory helps you out with something, whether that be sometimes we talk about risk management, sometimes we talk about time frames, sometimes we talk about back testing, putting things in your trade plan, how to log things, all these kind of things. If you have questions specifically on Top, which is the platform that we use, come to the Sunday sessions with Jose. And you can ask him in there because he knows all the answers and I only know some of them when it comes to Top. So if you have Top related questions, go to the Sunday ones. Any other sort of general trading or methodology or UFO related question, by all means bring them here to these Saturday sessions. Now I'm just going to make sure I've got the chat boxes open so that I can see if anyone's looking. Oh, this is a question from Christian. It looks like that was from earlier. So it was a question on Top mechanics. Okay. Okay, so that was a question on Top that I've just seen come through there, but I think that was actually meant for prior session based on the time that I can see that it happened. So yeah, by all means, go to the Sunday sessions to have questions or to ask questions about Top. Jose would be good at answering them. Now, let's just make sure we cover the disclaimers. There they are, top left-hand corner. The disclaimers are obviously there for legal purposes, but also it's helpful for you guys to understand that all of the videos that we do are demonstrations of how we think about the markets. It's up to you really what you do with that. You can take it on board, you can ignore it, you can do something in between. Ultimately, it's up to you as a trader. Now, one more thing to make sure that we cover. Of course, we'll do these things, lecture time, trade plan, reviews, questions and answers, things like that. One more thing to make sure that we cover right now so that you guys that are watching on YouTube or Facebook or LinkedIn or things like that, so that you understand how this happens. We are streaming in many different places at the same time, including within our closed coaching community. Now, people pay a small monthly fee to have access to our closed coaching community, and what that gives them is more of our time in that closed environment. So we do all of our sessions the same, but what we do is around about the halfway mark, we cut the stream to the free platforms and we continue within the closed coaching. So we're not hiding back certain information. It's not like that. It's just you have access to more of our time in that closed environment if you're part of the closed coaching community. If you don't want that or it's not important to you, that's absolutely fine. I'll still make sure I cover your questions whilst we're on the free sessions. So I'm just checking the chat boxes. If you see me looking around, it's because I've got chat boxes in different places. So just checking those things. Okay, so let me just bring up Top for now. By the way, these sessions are mainly for you guys, right? So if you do have questions, let me know and I can change what the topic is and answer your questions. You guys are the priority. Otherwise, I tend to go through a sort of theory topic that I have in mind. Today, I wanted to talk about how we balance following a set methodology closely versus trying things out, testing things, asking questions, challenging things, both of which are good, and somewhere in the middle is probably where the best place to be is. And I'll give you some examples of how you might change things around, how you might test certain different things, what questions you might have, and therefore where you might go to find out or figure out what's going to work better for you if you are going to make some tweaks and changes. But like I said, I'll keep my eye on the chat box in case you guys have specific questions that you want me to answer. I just need to do something quickly before I forget. It's just to say, if you go to tradewithufos.com/Becky, if you do have questions, ideally this is where you go to this place here, log in and ask your questions there. If your questions are here, then other people can see them and they can see the answers as well. So it means other people can all learn from this area. So ideally, that's where you'll go to post questions. Otherwise, you can email me at becky@traddictiv.com. Okay, so let's just go back to Top to just have that as our background so we can use that to show a couple of examples. Now, I just want to clear a little white space here and just make a point first. So when we first start trading, we learn from someone and we're given a set methodology, which is do this, do that, do that, do this, don't change that, don't do anything there. Stick to it 100%. Everything is mechanical, everything is technical, and all of our questions are answered by somebody just saying, do this. Now, when we first start, that's important. Because when we first start, I always make the analogy with if you're first starting to learn how to cook. If you're first starting to learn how to cook and Gordon Ramsay is teaching you, well, you better do what Gordon Ramsay says and just follow the recipe and do exactly what he says when he says to do it so that you can start to build that skill. Now, saying that, Gordon Ramsay is a good chef, so is Jamie Oliver, and depends where you are in the world as to who you know, but there are many famous chefs. Do they all cook in the same way? No. Very similar, the skill set is the same, but they've added some things, they've tried some different things, they've tweaked some stuff to create their own methodology, their own way of doing it. And that's great, they're all successful chefs, even if they don't do things exactly the same. But when you're first starting learning from one of them, it makes more sense to just follow what they say and not try and sort of make it up as you go when you're first starting. Now, a good way to know if you are one of the people that is ready to start asking those questions and start changing things, really is when you get into it, you've been trading a little while, and what I see is I see questions coming from people around about 2-3 months in, that they'll start to ask questions such as, what if I did this? Or I've noticed that. Is there a way around that? Or I've noticed that when this happens, that happens. That means you're good enough now. You've got the skill set to a high enough point where you can start to see variations and you can start to think past what you're being told to do. Now the question is, do you just stick with what you're told to do 100%, or do you start to diverge on that path? My answer would actually be the second one. Now I know what we teach is a set methodology of doing this exactly like that. But as we said, sort of number 2 here might be build your own methodology. Now, that doesn't mean scrap it and start from scratch. The good thing about having a set methodology to start with is that we have a foundation. We have something that says to us, this makes sense, this block. But maybe things like the wiggle room that we give on a stop, maybe we test that. Maybe things like, I don't know, if you're using auto climate, maybe start testing sustainability to give yourself a different rule on when you will and will not get into trades based on sustainability. If you're using auto climate, perhaps you look at when the line goes below, which means prices cross the EMA, how often that swaps everything entirely, and whether you can start applying sort of counter trend or counter climate trades as a part of that. You're still using the same technology, you're still using the same platform, you're still using the same methodology, getting in and out based on a certain set of rules, but you might start to tweak things. In the same way, if to make cookies you need flour and sugar and butter and eggs and whatever, you wouldn't start saying, oh, let me put broccoli in there, right? But you might say, oh, I wonder if I put a bit of vanilla, or I wonder if I put some cinnamon, or I wonder if I put, you see what I mean? Like, your foundation is still going to be the main ingredients, but you might start to add a bit of your own flavour and start to add a bit of your own thing. Hi there, Mark. Just seeing you in the chat box. Hi. Just waving at you there. Looking at the other chat boxes as well, just in case I'm accidentally ignoring people. So for me, you start here. We have to. Otherwise, it would be like trying to learn how to cook or bake and just going into a kitchen, pulling things out of a drawer, throwing them in a bowl and hoping for the best. When you're learning to trade and you have no idea how to do it, or maybe you've done something before and it just didn't work for you and you're trying to find the right way of doing it, making it up as you go is going to take years. It takes people years even if they have a set methodology sometimes. So let alone if they're sort of in the dark. So that needs to come first. And then ideally what we do is we start building on that. And we start diverging. Now I'm going to use timeframes as an example here, and I came to top specifically for this reason because we've got here 2-day and 3-day. So here are all the sort of common timeframes, right? On most platforms we have daily charts where each candle is worth a day. On most platforms, I think every other platform, I don't know of another platform that does this. Every other platform, it goes from daily to weekly, nothing in between. Daily, weekly, monthly, and then on some platforms you can get every denomination of minutes. On other platforms you have set minutes that you can use, but otherwise it's daily, weekly, monthly, and that's it. On top we can get 2 days and 3 days. So that's adding in different choices now into the mix. Now, as part of the UFO methodology, we have a very strict, very set table that you can have, we can send it to you, that tells you which timeframes to use. Again, bear in mind that that is the set thing for people that are really new to this or just getting started into this methodology, or maybe after time they use that and they're still comfortable using it that way. That's fine. A lot of us still use that set structure. But it's kind of like you're being told to cook something at 175 degrees. And then maybe later down the line, you think, I wonder if I did it at 180. Okay, so you're not necessarily going, oh, do you know, I'm going to cook it at 50 degrees. You're not changing so much, but you're starting to tweak things a little bit here. So usually, if we're investing, then it would go 1 month on our auto climate side, on our bigger time frame side. And then later down the line, in our smaller time frames, when we're actually looking at the UFOs to enter, it would be either 1 day or a 377 minute, depending on what you can see on your platform. Some platforms, oh, oops, didn't need to do that. Do that again. So we had 1 month, and then either 1 day or 377 minute. Now, some platforms will not let you see a 377 minute, which is fine. You just use your daily, no problem. And in fact, in some cases, the daily is actually better than the 377. Now, we have that for our investing using the Fibonacci numbers and giving you 2 choices depending on what you can see on your platform. Now, with top, we can now add into the mix 2 day or 3 day. Now, for some people, you now got 4 choices, and that might be something that might be overwhelming, confusing, not quite sure what to do or what to pick. You want to be told, do this, and that's fine. If you want to be told, do this, maybe don't watch the rest of this video because I'm going to kind of explore different things here, and just pick one of those 2 based on what your platform tells you, which means other people have answered that question for you. If you're a little bit more advanced or you want to try things in a different way, you can start to play about with things. And there are different ways that you can create a structure and create a plan around this. So if you now have 4 options, who's to say it has to be that you pick the same one every time? Now, picking the same one every time makes sense. It's a very structured way of doing it. It helps you to be consistent. And I would say that on most of our methodology, 99% of it, we should be doing the same thing every time. But what if in the cases of something like this, in this particular example, what if we did something like this? So we're looking at, this is Bank of Nova Scotia. It happens to be the last thing I was looking at. Bank of Nova Scotia. Let's do something that everybody knows. Let's do Facebook or something, just to make my point. And let's go to a daily. Okay, so let's say you have a rule that says your UFO number needs to be more than 50%. In fact, let us look at something where we might see that the daily has less than 50%. Okay, cool. So we're looking at Disney now. So let's say you have a rule that says your UFO probability rate needs to be more than 50% for you to place a trade. And in this case, when we're looking between daily and 2 days, 3 days, we're looking at position trading to investing, right? Much longer term trading that we'd be looking at. So with this, you've decided that your goal is 50%. You look at a daily chart, it's 48.43. It's not 50%, and therefore you don't have a trade. Now, what if in cases like that, you say, okay, the daily might not hit my rule, but what if the 2 day does? See how I changed the time frame from the daily to the 2 day, and it went from 48 to 55%. That's now hit your rule. That now has, I mean, the UFOs are further away, but it now has the probability that you need. Now, perhaps it has the probability that you need, but the UFOs are too far away and it doesn't quite line up. So maybe you look at the 3 day. And then maybe with this is assuming, let's assume, by the way, that this is a thick red dot, just to make the point, just to be really, really clear here. So let me just draw that. There you go. It's a thick red dot, okay? And let's say you want it to line up with the EMA and you've got everything lined up that way. Let's assume again that the EMA is like up here. Okay. Now the 3 day might then meet your 50% minimum rule and line everything up. So you've now looked between 3 time frames to find the best combination for you to be able to place a trade. That still has the right probabilities. That still fits your plan. So maybe your rule is, when it comes to the UFOs, is that maybe daily is your base. And if you do not see what you need to see on the daily, for example, that could be the EMA lining up with the UFO. That could be the UFO probability rate. Whatever the rule is to say that's what you need to see on this time frame, on the one on the right hand side. If you don't see it on one of them, you go to the other one within a range. So daily, 1 day, 3 day. Now in top you can do that. I don't think it exists in other platforms. It may or may not. Let's assume this is now smaller time frames. Let's assume that we've got a daily on the right hand side and therefore it should be a 55-minute on the right hand side. Now again, let's say that this didn't quite work out. It didn't hit the number that you want it to hit. Maybe you then go to a 60-minute, or maybe you go to a 120, and you give yourself 2, 3, 4, 5 different time frames that you cycle through until you find the number that you want to see and the setup you want to see. You're still combining auto climate on a bigger time frame, EMA on a bigger time frame, with UFOs on a smaller time frame. And I know I was about to say, who says it has to be a set time frame? I know we do. We do when we give our methodology out. We do when we explain it. We do when we do our courses. And we do when we do these sessions. And a lot of us do it when we trade. But if you might have more success by playing about with the time frames, play about with the time frames. It's not set in stone. One of the reasons why I really liked Trade with UFOs and why I wanted to be involved with it is because there are so many people out there that will tell you, do exactly what we do, it's the best thing ever, everybody else is rubbish, everybody else is wrong, we're right, just follow what we do and don't ask any questions. And some people like that, they like that direction. For me, I liked that with Trade with UFOs, it's very much like, hey, we'll teach you our methodology. If you want to stick with it, that's fine. If you have questions, we welcome them. We'll explain the logic behind it, the pros and cons behind different things that you could be doing, so that you can then make the decision for yourself as to what's best. Rather than us enforcing onto you that you have to do it in the way that we do it, and anything outside of that is de facto wrong. There might be many different variations of this that produce better results, and variations that produce worse results. There may be people that don't do anything like what we do and make money doing it. Great. As long as we're making money in the markets, really, who cares how we do it? And so if you have a foundation that over time you start to think, I've noticed, for example, if we come back to the daily versus the 2 day or the 3 day, I've noticed that the 2 day and the 3 day tend to have higher probabilities. That's actually mostly true. In which case, I'm going to tweak my plan. I'm going to cycle through the 3 different options that I have, or I'm going to only use the 2 day or only use the 3 day. You're still doing everything else exactly the same, but you've tweaked one part of the methodology. I would hope that over years and years and years, you actually tweak it so much by testing things as you go, that you end up with a mostly different strategy and methodology. Because you're testing things based on, if we start to think things like, I seem to see this, and what you're seeing and what you're noticing is not adding up with what whoever's taught you is doing, but you ignore what you're noticing and you stick with what you're doing and maybe have a couple of bad weeks, you're likely to not follow it anyway. So you might as well test your theory. You might as well go down that rabbit hole. However, there are going to be caveats here, or like with everything. If you go down the rabbit hole too soon, it can be confusing and overwhelming. If you go down the rabbit hole too often, or with too many things, you'll never get to the point where you're actually trading something, because you're going to be testing things all the time. I met a guy once, years back. I was teaching, I was in a physical room back in those days. There's a room of, 20, 30 people. And there was a guy at the back that kept putting his hand up with everything that we were talking about, my colleague and I, that were explaining a strategy at the time. And his questions were good questions, amazing questions. What if I did that? What if I did this? What if I changed that? What if I did this? What if I did that? And we would always say, absolutely great. Pick 1 or 2 of those things to test. If you're going to be trying to test hundreds of different variables, and therefore there are thousands of different combinations of all of those variables, you're never going to finish, which means you're never going to be trading. And every time you start to go down one and test one variable, that's going to invariably bring up other questions, and then you'll go and test those. That's too much, because the whole point of trading for most of us is to actually be in and out of trades, to actually be profiting, hopefully, on the markets, rather than just testing things out of academic or intellectual interest. At the same time, if you just stick to a methodology exactly as it is and never change anything ever, you might be missing out on some things that actually work better for you. You might be missing out on things that make more sense to you or that suit your lifestyle better because you're not willing to test things sometimes. So it's that balance. I would say give yourself a couple of months, get used to whatever set methodology that you're trading, that you've been taught, practice it, get to the point where you're starting to question things, you're starting to notice things, and then test them, and let your testing decide whether or not that changes your methodology. So that brings me into, if I bring up a blank Excel spreadsheet, testing. It doesn't need to be an Excel spreadsheet, it could be Google Sheets, it could be whatever software you want to use. But if we have a theory, we have to test it to prove it. Think of trading, it's like a scientific endeavor. If, you know, I don't know, gravity scientists, if that's a thing, people that research gravity, they don't say, oh, we've got a new theory, therefore that's right. They say, oh, we've got a new theory, let's test it. Let's test and prove whether or not it's right before we go changing things, before we go announcing that. So it's the same with our trading. If we say, for example, we've looked at a few stocks over a few, weeks, and we've gone, oh, the 2-day and the 3-day seem to have a better number. Right, I'm going to change everything to a 2-day and a 3-day. And we think that that by itself is going to be the magic nugget that changes everything for us. A simple change of time frame. Well, it might be that it worked on those few stocks over those few weeks, but that doesn't mean it's a permanent truth. That doesn't mean it works on every stock. It doesn't mean it works on every currency pair. It doesn't mean it works on every cryptocurrency, whatever it is that you're looking at. So what we want to be doing is saying, okay, I've noticed something, or I have a theory about something, let me test it. So what you might do is you might bring up, if I bring this up again. Oh, Mark, I've just seen your question. When do you start doing sharpening on top? We do those on Sundays. Jose does them on Sundays. So he'll be on tomorrow, and he does everything. He's, as you know, Jose, very, very detailed, knows a lot more than I will ever know. So he does a lot of the sessions on top on Sundays. So it should be on tomorrow. And there should be some recordings as well. If you go back to the Sunday night ones, or the Sunday, wherever you are in the world, the Sunday ones, in the past, they'll be on top as well. So hopefully you can find them there. So let's say you've got an Excel spreadsheet and you're going to be testing the timeframes. By the way, timeframes is a random example. You could be testing indicators, wiggle rooms on stops, where you put your targets, all sorts of things. So let's say it's the timeframe thing just as an example. You might, and this should be done in a backtesting environment, it could be demo traded, just might take you a while. You might then have a spreadsheet that's very, very simple. You could, let's say you're doing stocks. Okay, again, it could be whatever. Forex, futures, options, whatever. So you might say the stock, you might say the, you already know what your auto climate would be, and you're just testing the timeframes on the right hand side. So you might then have things like, I don't know, the entry, stop, target 1, target 2, and then you might want the outcome, did it win or lose? Notes might come at the end, and then here you might just put time frame, maybe UFO time frame, right? TF time frame. And so all of these things are just you keeping a note of what's happening. In fact, let's highlight them a different colour. And let's make this bigger so we can see what we're doing. So just squish that up. There we go. So all of these things that I've highlighted there are just for you to keep a track of what's going on. And what I'm saying is this is so simple. And then this is the one that you're testing, the time frames. And so you fill these in, you know, Disney, whatever, make up the numbers, 195, 200. You might want to put in whether you're long or short. That might help, like stance, short, 190 and 185, whatever. Loss, daily, whatever notes, and so on and so on. And then that way, over time, you're going to have 2-day, 3-day, daily, 2-day, 3-day, 3-day, 2-day, 2-day, 3-day, daily. So you're just going to go through and you're going to test. And you're going to collect some stocks based on whichever UFO that you want to pick, whether that's the ones that had a higher than 50% rule or that lined up better or whatever, look at the time frames. And then after you collect, in my opinion, should be hundreds of trades, hundreds of pieces of data, well, then you've got a big list where you've got outcome. Literally, these two become the most important thing. Outcome versus the time frame. Was it a loss? Was it a profit? Was it break even? You know, whatever it was. And then you can start to weigh up against these two, and you can just filter on Excel or Google Sheets or whatever. And then you can say, okay, out of all of the daily trades, and let's come down here. Let's say you have, and I'm making up this data off the top of my head, okay? I'm not making a point. So let's say you had total trades, profits, I guess losses or break even. Let's put them into the same thing. So break even or loss. So let's say you had 50, 61, 42, and you had 12, 18, 25. Okay. I guess actually we know that it's just the opposite of those things. So that way you can then just do a percentage and figure out, let's make this into a percentage. Again, this is assuming that your profits are defined. You can then just figure out by going through this and saying, okay, that was how many total trades I had of each category. That was how many of them were profitable each, and therefore what percentage of these trades were profitable. Again, I've made up this data, but by doing this, let's say this was the data. Well, then you go, great, that one. You know, it's very simple. Now, it might be that you look at it and you go, that one was better, but I had significantly fewer trades. So actually, maybe I'll choose between this one and this one. It doesn't have to be that you take it all in or out. You can have something in between. But what I'm saying is that you can test things over time and therefore get the data that proves your theory to you. If your theory is that a 3-day chart works better than a 2-day or a daily, prove it by testing it. Test it on the markets you actually trade. Test it using the strategy you actually use. Test it at the times that you actually would be sat down trading it, so that the only variable that changes is this, or these. And once you are only changing that variable, you actually prove the point, yes or no. And then you've got a much easier decision as to whether or not you change your strategy moving forwards. So hopefully that makes sense. Okay, so what I'm going to do now, Mark, I see your question. I am going to cut the stream now, just because we are about halfway through, and I came to the end of a point, so I think that makes sense. It's like a natural end. So I'm going to cut the stream to the free places, and Mark will continue in the closed coaching when I can answer your questions and we can sort of have a chat, I guess, back and forth. So let me just cut the streams. For those of you that are watching on the free streaming platforms, or you're watching recorded on those platforms, YouTube or whatever, if you have any questions, ideally, please go to tradewithufos.com/Becky, and then you can scroll down here and you can ask questions in this area. I can then answer them in that area and we can all learn from that place. Or you can email me, becky@traddictiv.com. I will love you guys and leave you. I'm going to cut the stream there and I will continue in the closed coaching. So for those of you there, just give me a sec. Otherwise, see you guys soon.